Good morning, peoples. Let's jump in here to Coney. But even before I do that, let me give you, many of you may have heard this, but I wanted to go over this a little bit. So there is a new fund starting today, and Yieldmax put some news out. Some of you saw Jay mention it. So what is Fiat? FIAT. It's an inverse fund. It's the second inverse fund. What do they mean by an inverse fund? Well, all of the existing single stock funds are bullish bets except for Crash. And Crash was the first inverse fund, right? So instead of buying a call and selling a put, they're buying a put and selling a call. And then they have a naked put instead of sort of a naked call. And then the inverse fund has one additional protection, but you don't need to know all that right now. They buy a long out of the money call. Because in theory, a stock can go up and up and up and up and up, whereas when you have a naked put, it can only go to zero. So that's a little bit of the extra insurance protection there. So Fiat is coin-based inverse, okay? But let me give you guys just a small tip on the whole thing behind inverse and long stock. Think of it as long stock and short stock. So if you're trading flat with small 3 and 4% movements up and down, you could own both of these funds and do great, both in Tesla and in Crash and in Coney and in Fiat. Where you start to get into trouble and it doesn't make a lot of sense. And again, you can skew your percentage, right? I could do 75% long Coney and 25% short Fiat. But in my opinion, there are better methods if you want protection only. And also, don't forget that these income funds aren't the best protection vehicles. And what do I mean by that? When you're getting income, you sacrifice some of in a rapid bull market, right? Let's say Nvidia's going to go to 400 in the next 3 months from 128, wherever it is right now. The last thing you really want to own is an income fund. As far as a gain percentage, now you're still going to get some gains, but let's say that it goes from 128 to 400. You might only get an 80% gain, and the underlying stock's going to get a 320% gain. So these real rapid run-ups, you just simply can't keep up in an income fund because they're going to write it out at 8-10% a week. So that's the most you can get. And when they run, that most you can get turns as a negative and it eats up all your long stock, your synthetic gains. So it can be a real boat anchor on the way up in rapid, and the same thing on the way down. So say you own Tesla and you're bearish on Tesla. Well, probably just leave Tesla alone and buy Crash because as it goes down, you're going to benefit. But they only in owning both, typically when it's a sideways to 3 or 4% a week, up and down like that, it's a perfect environment for that because you're collecting income on both sides and you aren't really losing NAV. But when you have an outside gain in one, it's going to get hurt a lot worse than the one that's going up. And the one that's going up, if it's a big outside up movement, you're not going to capture all that, right? So I love income funds and they have a spot, but if I see a real bull environment, I'll probably go buy some 2X ETF of coin that's real cheap, right? It might be a $20 a fund that's Conal, for instance, right? Conal is a 2 times coin. So there's nothing wrong with owning Coney, but if it starts really running, I want to own some Conal 2x coin while I'm owning Cony, it's going to go up and collecting my income. So anyway, I just wanted to point that out. Don't think you're perfectly protected by going in and buying one and buying the other, right? Because you're not. You can get good income in a flat to slightly up and down environment. All right, enough of that. Let me jump into coin and Cony. So what did they do? No trades today. 125,000 shares. I didn't update this cash and stuff over here, but that's relatively easy to do. It's just not that relevant sometimes. So we did 125,000 shares. They didn't put any additional trades, and in all honesty, it was pretty flat. Look at this, minus 0.27. Coin went all of 220.56 down to 219.97. It barely had a net move, right? And on the other hand, we didn't go down. We went up a penny from 1907 to 1908. So again, these are bargain prices on these Bitcoins. There's no question about that, guys. So let's look at some more stuff. Whoops. I really didn't have my Bitcoin. I wanted to see where Bitcoin was this AM, and I don't have that up, and I don't feel like, well, I'll do that while I'm trying to show you something else. So let's take a look in here at our weeklies. So on the weeklies, this is the chart. We still have 37 now. We're 6.55 and 4.28, right? So that says to me, and I'm checking Bitcoin right now for those of you that already know. So it's 58,540. So it's hanging in there, right? It hasn't, it touched 59 and it's 58.5. So that's okay as long as we stay up here, because if we go back down to 55.54, we're going to 50.52. So the real question is, can it hang on and slowly move up and then break out? Anything over 60 gets us on that upper shelf. Okay, guys. So this is in line. We're positive now. Look at our momentum, 59.69% of our weeklies. And let me show you that in holdings, right? Here it is. So the big one, we've now captured 60. We could buy back the 8.5 for 3,300,000. So we're almost 61%. And we finally got this one in the positive where we collected 288 and we could buy it back for 219. So kudos. And, we didn't move down much. Look at our synthetic. 24 basically was flat, 22, 5 before, 13, 9. So here's a chart all at the 230. So that's not a problem. Overall, I'd say things are good. So let's see if we can wrap this up. Oh, and fair value, we closed at 1907, and fair value is 1907. Excellent. Let me wrap it up for you. Payments. Okay, so there's the new share count reflected. Again, we didn't add any, but here's where we're making our money, and where we're hurting this month is this big, roll that we did where we're way behind. I mean, we're behind 24 million, but that's less than $1, right? That's like 65 cents or something. So that can be made up if Bitcoin starts to move. So I'd say all in all, coin is okay. And FYI, now you have a fiat, and now you know a little bit more. Now, what's also coming as a reminder in about 2 weeks, so I'm kind of holding them to 2 weeks from Wednesday, but I'm sure it could be give or take a day. They're going to launch DIPS, DIPS. I mistakenly called it chips before. And Jay mentioned, they were teasing each other because what is NVIDIA? They're known for chips, right? So DIPS is chips and dips, right? So DIPS is inverse on NVIDIA, right? So think of it, NVIDIA is long NVIDIA, DIPS, DIPS, is short, or inverse as we call it, coming out in a few weeks. Okay, guys, that's what I got for you. Again, this is Bruce with Targeted Wealth Creation signing out. I'm not a financial advisor. This is not financial advice. It's for fun and entertainment. And now you're entertained. Okay, guys, bye. See ya. Have a great day ahead.